Hey everyone, welcome back to the channel. Today we're dissecting the latest US jobs report, breaking down the numbers and exploring what they mean for you, me, and the economy. Think of this as your crash course into what's really going on under the hood of the US economy and delivered to you in plain English. So in December of 2024, the US economy added 256,000 jobs. That's a solid performance for the month and a strong way to close out the year. For the entirety of 2024, we've seen 2.2 million new jobs, averaging around 186,000 jobs per month. Comparing that to 2023, which had 3 million jobs, an average of 251,000 jobs per month. And you'll notice that we've slowed down quite a bit since then. But let me be clear, this isn't bad news for the economy. It's more like the economy is shifting gears and moving from a rapid recovery post-pandemic to a more sustainable, steady pace. The Fed's policies, those interest rate hikes we've all been talking about, are doing their job. They're cooling the economy without stopping it in its tracks. Okay, so let's dig into where these jobs are coming from. December wasn't just a random bump in the market. It was driven by a few key sectors that are worth paying attention to. Healthcare, for example, added 46,000 jobs last month. Within that, home healthcare services led the charge with 15,000 new positions. My thoughts here are that it's a combination of we have this aging population in America, and there's this new emphasis on home care. A lot of people prefer to be taken care of at home in their elderly years. So government jobs were as steady as ever. Government jobs continued their upward trend, adding stability to the overall job market. And then we have social assistance. These sectors also saw a boost, which tells us there's a growing demand for services that help people navigate through tough times. Retail trade had lost jobs in November, but retail bounced back in December. It's a reminder that while consumer spending is cooling off, it's not dead. It's still there for sure. Now let's talk about the unemployment rate, which held steady at 4.1% with 6.9 million people still out of work. For context, that's a healthy number. Historically, it's not the 3.5% or 3.5% low that we saw pre-pandemic, but it's far from recession levels. Another big update in the report would be that the BLS revises its seasonally adjusted household data for 2024. Now, this means that unemployment rates that we've been looking at all year just got a little bit of a tune-up. Now, why does this matter? It's like recalibrating a scale. Small changes in data can shift how we interpret the trends over time. But the good news is that the revisions don't alter the big picture. They just make the numbers more precise. So where does this leave us here in 2025? Well, the jobs market in 2024 wasn't as red hot as 2023, but it's still growing. Think of it like this. Last year we saw a sprint. This year it's more of a jog at a more sustainable pace that the economy can continue on with. And it's not just me saying that. It's backed by data. It's backed by the numbers. This year's monthly job growth averaged 186,000. But here's the million-dollar question. What does all this mean for the 2025? If job growth stays in this sweet spot of strong but not too strong, we'll likely continue to see stability. The Fed will likely hold steady on interest rates, and business will keep chugging along as normal. But if job growth slows down too much, we could see a domino effect, lower consumer spending, tighter corporate profits, and maybe even whispers of a recession. That's the balancing act that the Fed is trying to play at. They want to slow down the economy just enough to control inflation without tipping us into a full-blown economic downturn. It's a tough job, but so far I think they're doing a really good job, but they're walking a tight rope. So what does this all mean for you? Well, if you're looking for a job in the market, they're still hiring, especially in healthcare, social assistance, and government roles, but competition might be heating up. As the pace of hiring starts to slow down, I highly recommend if you are in a position where you need to get out there, get a job, do it quickly. Don't sit around and wait. I don't think that we're going to fall into a recession, but it's always better to have something, have a job secured than not. If you're an investor, pay close attention to sectors that are growing. So healthcare, AI, for example, they're both long-term bets that, especially given the general market demographics and trends, I don't expect that those are going to be slowing down. If you're worried about the economy, don't panic. This is what healthy slowdowns look like. Think of it as the economy catching its breath after running a marathon. Here's a long-term trend I want to highlight. The shift where jobs are being created in healthcare, social assistance, and government, and AI, of course. they're becoming increasingly important while other sectors like manufacturing are starting to cool off. So that's important to pay attention to. Now, this isn't just a monthly blip either. It's a reflection of a deeper changes within our economy. As Ray Dalio might say, it's all part of the economic machine. Understanding these shifts help you to see where the gears are turning and where opportunities could lie. The December jobs report is a reminder that the U.S. economy is resilient, but it's not invincible. It's growing, but at a pace that feels more sustainable than the post-pandemic sprint that we had previously seen. As we move into 2025, stay focused on the big picture. Whether you're investing, working, or just trying to make sense of all the headlines that we keep seeing, just remember the economy is a machine, and the more you understand on how the parts of this machine work, the better that you can navigate it. Now I want to hear from you. What's your take on the jobs market right now? Are you feeling optimistic, cautious, somewhere in between? Drop a comment down below and let's keep the conversation going. Let me know what y'all think. And hey, if you found this breakdown helpful, don't forget to like, subscribe, and share. Let's build a community of people who love understanding investing and how the world works.